Welcome to this week's Market Talk. I'm Amber Lancaster, joined by Paul Mampilly and Ian Dyer. Each week, we look forward to sharing our viewpoints with you, our readers, and giving you insight into what's on our radar. Today's outlook is for the week of March 25th, 2019. I'll begin by sharing with you what I'm watching, and then we'll hear from Ian and Paul. And if you like what you hear and what you see with today's Market Talk webinar, please feel free to subscribe to this channel or visit us at Bold Profits Daily, a Banyan Hill Publishing daily e-letter. So this past Friday's inversion of the 10-year yield curve is a big topic of discussion amongst investors. Talk of a looming economic downturn inevitably comes up when an event like this happens. But we here at Bold Profits don't foresee this inversion as a precursor for a financial market fallout anytime soon. And here's why. The economic baselines for the U.S. economy remain solid. This is supported by historically low unemployment, low inflation, and the leading economic index released this past Thursday, which is a gauge of the overall economic health of the U.S. economy. Now, this index increased for the first time in 5 months, which signals continued steady overall economic growth for the U.S. economy. And another factor is the Fed. According to Bloomberg data, the Fed holds a larger amount of U.S. Treasuries compared to previous periods that the yield curve inverted, which in turn downplays the relevance of the signal. So with that being said, we have a number of key economic releases to look forward to this week. And as you can see in this graphic, housing starts for the month of February will be released on Tuesday. Now, surveyed economists are expecting 1.219 million homes. The very important consumer confidence number for March will be released Tuesday as well at 10 a.m. And economists are anticipating a slight uptick to 132.1. Fourth quarter 2018 GDP revisions will be released on Thursday, and surveys are expecting a reading of 2.4%. And we'll see the initial jobless claims for the period ending March 23rd on Thursday as well. And rounding out the week, we can look forward to personal income and personal spending numbers on Friday. Both are expected to bounce higher to 0.3%. On the Fed front, according to a plurality of economists recently surveyed by Bloomberg late last week, the Federal Reserve's new dovish stance is getting monetary policy, quote, about right, end quote. And as you can see in this graphic, one of the questions asked of the economists in the survey was, how has your outlook for Fed interest rate policy changed by last week's FOMC meeting? So out of the 37 respondents, 51% said the meeting lowered their estimates for Fed rates through 2020, while 49% said they'll remain the same, and while a notable 0% saw an increase in Fed rates. And on the technology front, there's an interesting upcoming IPO for us to keep an eye on. Zoom Video Communications just filed paperwork with the SEC this past Friday, March 22nd, to go public on the NASDAQ as soon as next month. And the best part about Zoom is that it's a profitable company. According to TechCrunch, the video conferencing company was recently valued by as much as $1 billion as of 2017. And the company's losses are shrinking steadily from $14 million in 2017 to just $7.5 million year ending January 2019. And the company has more than doubled its revenue from 2017 to 2018 and has earned $330 million in revenue as of January 31st this year. And as seen as in this graphic, Zoom helps businesses and organizations bring their teams together in a frictionless environment to get more done. Meetings, business instant messaging, video webinars, developer platforms, you name it, Zoom aims to cover it. Their easy, reliable cloud platform for video, voice, content sharing, and chat run across mobile devices, desktops, telephones, and room systems. So Zoom's customers include Uber, Pandora, Autodesk, Slack, Match.com, Ticketmaster, GoDaddy, TechMicron, and full disclosure, us here at Bold Profits Daily. That's how you're watching us right now. So it's always good to see an IPO from a promising company which produces products you use successfully. So lastly, as this graph shows you, our disruptification index, simply put, is going gangbusters year to date. It's beating the S&P 500 by more than double and trouncing the Dow by nearly triple. And this is as of March 22nd's close, in which we saw a downturn in the market. So more specifically, the index is up 28.9% versus 9.3% on the Dow and 11.7% on the S&P 500. And as a reminder, our disruptification index consists of all the stocks we recommend to our subscribers across numerous Bold Profits publications. So if you want to learn more about our services and recommendations, type Bold Profits Daily into your search engine of choice to read more. So that's what I'm watching. Ian, let's hear from you. What are you watching this week?
Thank you, Amber. So first, I want to talk a little bit about the big existing home sales number that we saw come out last week. And that was for the month of February, and it was reported that existing home sales went up 11.8% in that month. So this is a huge deal because that is the second biggest gain for existing home sales since 1983. So it's been 36 years, and we've only seen a gain this big one other time in that entire 36-year period. So that's very promising for the housing market. 5.51 existing homes were sold in February, so is not even peak home buying season, and 41% of those houses had only been on the market for less than a month. So people are listing their homes, and there's so much demand out there that they're being sold almost right away. And I can kind of attest to that because I recently sold a house, and it only took about 2.5 weeks between the time we listed it on the market and the time where we accepted an offer. So that's just firsthand experience for me that this housing market is on fire. And once the spring and summer comes, we expect that to get even higher. So the fact that millennials are really making an impact on the home buying industry is huge, because right now about 42% of new mortgages at the end of 2018 were from millennials, and now they make up over 36% of the home buying market, and they're the biggest demographic right now in the United States. So millennials are really having a big impact on the housing market. We expect these trends to continue, and there are a number of economic underlying situations that are pushing it up. So for example, unemployment at 3.8%, that's historically low. It's about 50 years since we saw unemployment that low before this recent run that we've seen. There's also rising wages. So over the past year, wages have gone up 3.4%. And on a month-to-month basis, it's been 16 straight months that we've seen an increase in hourly wages. And in the past 3 years, so 36 months, we've only seen 2 months where wages have gone down. So people are making more money at a higher rate. There's also low inflation, which is around 2%. So the hourly wages over the past year have almost doubled the inflation number. So people are making more money. The prices of goods is not going up as fast, so they can afford to buy huge, big-time purchases like houses. And of course, it's also helped by the low interest rate market right now. So on the housing front, we believe that this trend is going to continue. This could be a very long-term trend too, because it's generational, and the millennials are really starting to make an impact right now. So this could happen for 10 to 15 years or even longer than that as millennials continue to come into the housing market. Another thing that I'm watching right now is blockchain technology has gone into the phone market. So now there are blockchain smartphones. We've seen a couple examples of this, like the HTC Exodus, the Samsung Galaxy S10, which is about to come out. And this is a really big deal because security has been a really huge problem, especially the past few years with things like hacks People have lost their social security numbers, their emails and passwords have been compromised. So there's been a lot of cases of identity theft, which can really just throw someone's life out of control, kind of, and people are worried about this. They want to keep all their information secure, and there's no better place to do that than the blockchain, because as you've probably heard, the blockchain is a decentralized network. So even though there are millions of computers and now phones on this network, the information stored on each one of these devices is only accessible through that device. And it's stored in there very securely. It's secured under a encrypted key that only the owner of that device has access to. And with the emergence of blockchain phones, there's also the emergence of decentralized apps, or dApps, that are also stored or programmed and created, and the information that those apps collect are all on the blockchain. And the apps market is something that we've seen just blow up over the past 10 years since apps really became prevalent with the first the iPhone 3G back in 2009. Since then, the number of apps out there has gone from 500 to 2 million. There have been 200 billion downloads of apps worldwide.
Wow.
So this new generation of apps, we believe, is going to just take over. And this is important because the information in those apps is secure. So for example, there's one called Numbers out there already. It's on the HTC Exodus, and it collects information like the number of steps you take, miles walked, hours slept. So it's essentially a fitness and health app, but the information that it takes is all completely private. And you can actually choose to sell it to third parties or advertisers who otherwise would just take it for free, distribute it to whoever they wanted to. But with these new dApps, you can choose to sell it to them so you can make money from that. So it's a really enticing new technology that we're seeing really just start to break out. So that's what I'm watching this week. And Paul?
Thanks, Ian. Wow, great information from both of you, Ian and Amber, and welcome back, Amber. So I'm going to touch on a lot of things that Ian and Amber raised, and let me start with what Amber said, which is like there is a lot of stuff out there about the inverted yield curve. Scary, 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 says everyone. And if you guys have been following us for a while when we were doing Winning Investor Daily, you'll see that I made an update some time ago on the inverted yield curve and said, look, to me, the inverted yield curve is really a reflection of our times. And I believe that what we are experiencing and are going to continue to experience is what we would call a deflationary boom. And in that scenario, it would make sense for future rates to be lower than current rates, because that's what an inverted yield curve means. In other words, where the interest rate for the 10-year bond is lower than the interest rate for the 3-month Treasury bill. So in most people's minds, it makes sense that, look, well, if I'm buying a 10-year bond, I should receive a higher interest rate. However, that is only true if you make the assumption that prices are going to rise. In a deflationary period, prices go down. So it makes sense that interest rates in the future would be lower than they are today. So the other thing that people say, well, Paul, well, why would there be deflation today? And this is what I believe, and at least we have one piece of evidence that says that I'm onto something here, which is that if productivity increases, you would have deflation. In other words, you're getting more with less. And here's why I believe productivity is increasing and going to continue increasing. And it's really what we invest in Bold Profits Daily. It's our megatrends. It's the Internet of Things. It's artificial intelligence. It's the blockchain. It's robotics. It's all of these incredible trends that really shrink costs and make you more productive. And these megatrends really allow for productivity to increase where you get more with less. And we got, just on cue almost, a solid signal of that. In the fourth quarter of 2018, we saw the biggest increase in productivity in 8 years. And in fact, I've actually made a previous Winning Investor Daily when we saw another sign last year that productivity is rising. So if you think about what we're going through today, we have increasing employment, we have increasing wages, both of which were brought up by Ian, and we have increasing productivity. These are conditions for a boom. The only thing that people would say, well, why are prices not going up? That's because we have these unbelievable, phenomenal, incredible technologies that shrink cost, and where when you invest in them, you get so much for your dollar, so much bang for your buck, that it reduces the prices. And these are the conditions that you have in a deflationary boom. And that's what I believe we have going. That's what I believe is going to continue to happen. And it's one reason why I'm incredibly positive and optimistic for our stocks, because we are invested in what makes this happen. So when I look at what's going on, I am completely, unbelievably optimistic, because I believe our scenario is playing out, which is why, as Amber's shown out, our disruptification index keeps blowing the S&P 500 away. Now, it'll never do that every single day or every single week or even every single month. Nonetheless, if you're in our stocks, our performance analyst has shown me that our Profits Unlimited portfolio, equal weighted, with about a 3-year track record, is annualizing in excess of 20%. And that's because of what I just told you. So stick with bull profit stocks, stick with the growth, stick with our services. So to cover some stocks that are in the news, Tesla is one that, of course, is always in the news. Some of you may have heard that Elon Musk and Tesla are being sued by the SEC. They would like him to stop tweeting. And the thing about Tesla that few people know is that they have never spent a single dollar on marketing. They have sold hundreds of thousands of cars around the world with no marketing, no advertising, none, zero. How do people find out about the Model 3 or the Model Y? Well, Elon Musk is so newsworthy. He's covered every day, whatever he says, whatever he does. And so in their defense of why he tweets, they're like, well, he actually gets so much free publicity for the company that it would be actually a huge detriment to the company. So Elon Musk actually puts up a pretty interesting defense for his tweets. And it's likely that he'll get another slap on the wrist, and perhaps it'll curtail him a little bit. However, he's taking it to the SEC, and I believe he has a case for what he's saying, which is, in other words, nothing he's saying is really non-public information. This is a really well-covered company, and in addition to that, this is a company that is heavily shorted. In other words, people really want this company to go down. There are a lot of people. I looked up these numbers. There are 26.9 million shares sold short against Tesla, which represents about 3.5 days worth of trading volume, which is just immense. It's 21% of the total float of the company. So you can say that there are a lot of people that want the stock down. And for whatever reason, Ian, Amber, and I have talked about this, the press hates Tesla. We really kind of stumble around trying to figure out why they hate them. And we think it's related to what I mentioned earlier, which is that Tesla spends nothing on advertising. So why would you want to help these guys out? You might want to help GM out or Ford out by writing some of these articles. Now, people call that a conspiracy theory, and okay, if that's what you want to think, that's fine. However, I think it's kind of valid to some extent. Another company that's big in the news is Apple. And all of you know, if you've been following me for a while, I have been negative on Apple for about nearly 3 years now. I was wrong for about 1.5 years of it. It went up while I was negative. And now it's started to go down, and now they're going to have some big event which is going to pull the screen apart and somehow show you that they have magically transformed themselves into a services company. In other words, they want you to stop focusing on their declining iPhone sales, their declining iPad sales, their declining sales of computers, and now focus on the growth in their services business. However, there's just one problem with this entire scenario, which is that the growth of the services business depends on them selling devices. In other words, they lock you into their services when they sell you an iPhone, when they sell you an iPad, or when they sell you a computer. If those are in decline, it's inevitable that in time their services are also going to go down. So people are speculating if this is the moment to buy Apple because they're going to transform themselves. I would tell you that from my vast study of companies, that most companies are unable to do more than one thing very well. And Apple is fabulous at making devices, or I should say was fabulous at making devices, and it's let some of that magic go away, and I believe it's going to go into decline. However, we'll see what happens. The next thing and the final thing I want to bring up, which goes back to something that Ian mentioned, is blockchain. So Cisco Systems, which is the premier networking company around the world, released this incredible report. It really had some stunning facts. We're going to put up a couple of charts on this. So you'll see this on the first chart, which just shows that 83% of people making decisions really trust the blockchain technology. And Cisco expects 10% of global GDP. So I want to look this up. That's $7.5 trillion with a T, a capital T, $7.5 trillion to be on the blockchain by 2027. I know some of you say, well, Paul, that's like a long, long way away. I can tell you, financial markets anticipate this, and they will start to price this into stocks very quickly. And shorter term, Cisco's research says that $9.7 billion will be on the blockchain by 2021. And that's being priced into stocks right now. And as you guys know, blockchain is one of our megatrends. We have multiple stocks that play on it, and we're unbelievably optimistic for this technology, for the stocks that play on this. So check out our Profits Unlimited portfolio for the blockchain stocks and make sure you're in them. And the report goes on to say why this is going to happen. And I believe that it really makes sense, which is that if you look at what causes problems in the global economy, transparency is a huge problem. And the loss from transparency, as you'll see from this chart here, is $7.5 billion. $7.5 billion. And the chart also shows that people pay as much as high as 30% interest rates just for the complexity of all these transactions, which is related to trust and not knowing where things are. So like if you're in a business and you're having an account receivable discounted this as high as 30%, which is a crazy high cost. If you can shrink that down to 1 or 2%, whoa, the profitability of your business is just going to jump. So that makes sense for a business to invest in blockchain. And finally, security. There's going to be 20 billion plus devices in the Internet of Things, and blockchain is the way to secure them. So take a look at our portfolio and get into blockchain. So that's what I have. Back to you, Amber.
Thank you so much, Paul. Excellent update from both you and Ian. And thank you to our listeners, watchers for tuning in this week. We hope you have a wonderful week. And until then, take care.